Hello, and welcome to today's discussion. I'm Sonia, and I'm joined by Simon. We're here to explore some of the biggest stories making headlines this week.
That's right, Sonia. We've got a packed episode covering everything from oil markets to real estate developments and cryptocurrency innovations. Let's dive right in.
First up, OPEC Plus ministers recently met to discuss increasing oil production quotas amid surging prices due to the conflict in Iran. The Strait of Hormuz has been effectively blocked since late February.
That's a critical waterway for global oil supplies. How have prices reacted to this disruption?
Oil prices have nearly doubled since the conflict began, igniting inflation pressures worldwide. The reporting indicates that OPEC Plus is under pressure to respond to these price surges.
So, what did OPEC Plus decide in their recent meeting?
They agreed to lift their combined oil output target by 188,000 barrels per day from July. However, analysts are skeptical that this increase will have a significant impact on global prices while the Strait of Hormuz remains blocked.
That makes sense. If the supply chain is disrupted at such a critical choke point, increasing production quotas doesn't necessarily translate to more oil on the market.
Exactly. The article suggests that the real challenge is the geopolitical situation rather than just the production capacity. The war with Iran is preventing several OPEC Plus members from pumping more oil.
This ties into another story we have about OPEC Plus raising their July oil quota. Can you walk us through the details of that decision?
OPEC Plus agreed on a fourth increase in their oil output targets since the Strait of Hormuz was closed. The combined output target was lifted by 188,000 barrels per day from July. Key members like Saudi Arabia and Russia will each contribute 62,000 barrels per day.
How does this latest move fit into the broader context of the global oil supply crisis?
The war has created the world's biggest ever supply crisis. Key OPEC Plus members, including Saudi Arabia, have been unable to supply customers in full since the end of February due to the blocked Strait of Hormuz.
It's interesting that OPEC Plus is continuing to raise output targets despite the clear supply chain disruptions. What does that say about their strategy?
It seems they're trying to signal a commitment to increasing supply, even if the current geopolitical situation limits their ability to actually deliver more oil to the market.
Let's switch gears to a different story. The Dharavi redevelopment project in Mumbai is one of the world's largest urban regeneration initiatives. What's the current status of this project?
The Adani Group is undertaking this massive project, aiming to rehabilitate over 1 million residents and construct more than 125,000 housing units over the next 7 to 8 years. According to an HSB report, it poses a significant execution challenge.
That's a monumental task. What are the key challenges highlighted in the HSB report?
The report characterizes it as a massive execution challenge due to the sheer scale of the project and the complexities involved in relocating and rehabilitating such a large population.
How does this project fit into India's broader urban development landscape?
The Dharavi redevelopment project is seen as a critical initiative for Mumbai's urban regeneration. It's expected to transform one of Asia's largest slums into a modern, sustainable urban area.
Now, let's jump into the world of cryptocurrency. Bybit has launched a new service called IPO Express, allowing retail investors to access tokenized IPOs. Can you tell us more about this?
Bybit, the world's second largest cryptocurrency exchange by trading volume, has introduced Bybit IPO Express. This service allows eligible retail investors worldwide to participate in blockbuster IPO projects by subscribing to tokenized representations of publicly offered shares.
That's a significant innovation. How does this tokenized IPO access work?
Powered by Payward Services Xstocks, investors can purchase shares at IPO pricing without needing traditional brokerage accounts. The first offering under this service is for SpaceX.
SpaceX is a highly anticipated and private company. How does this move potentially change the investment landscape for retail investors?
This gives retail investors access to high-profile IPOs like SpaceX at the offering price, bypassing secondary market competition. The registration and subscription for SpaceX ran from June 7th to June 11th, with allocations to be finalized between June 11th and June 12th.
On a related note, some articles are suggesting alternatives for investors who might not want direct exposure to SpaceX. What's the story there?
For investors looking to avoid direct exposure to SpaceX, the Vanguard Dividend Appreciation ETF is being recommended. It's a low-cost ETF focused on high-quality companies that pay growing dividends.
How does SpaceX potentially impact these ETFs, especially those with a broad market exposure?
As SpaceX becomes more significant in certain indexes, ETFs tracking those indexes might see increased exposure to SpaceX. Some predictions suggest SpaceX could become a top holding in some Vanguard ETFs by mid to late 2026.
So, what's the takeaway for investors considering these ETFs as an alternative?
The Vanguard Dividend Appreciation ETF offers a way to invest in established companies with a history of dividend growth, potentially providing a more stable investment compared to the volatility associated with direct IPO investments like SpaceX.
As we wrap up today's discussion, it's clear that these stories span a wide range of markets and industries, from the geopolitical tensions affecting oil markets to massive urban redevelopment projects and innovations in cryptocurrency and investment products. There's a lot to keep an eye on.
That's right. Each of these stories highlights significant developments that could shape their respective markets in the coming months. Thanks for joining us on this episode.
Thank you, Sonia, and thank you to our listeners for tuning in. We'll be back next time with more insights into the world's most pressing economic stories.